Bitcoin doesn't need to take an ideological view on how AI is expressed either, right? It doesn't actually have to take the ethical concerns of AI into the conversation because Bitcoin is not about having an ethical view. But what it does recognize is it's a store of energy for which high compute is considered important. I think when you introspect deeply and understand that's what people want to own in their portfolio, that's valuable to them, I don't think there's any asset better than Bitcoin in the world.
What's going on, guys? Today we got a great episode with Jeff Park. Jeff is the Chief Investment Officer of ProCap BTC, and in this conversation, he lays out a view of the world that pits the intelligent investor versus the ideological investor, and he explains exactly what the differences are and why you understanding this framework will help make you a better investor in the market. On top of that, we talk about the idea of a Bitcoin treasury company and why treasury operations, the ability to actually generate more Bitcoin on the balance sheet without having to raise more capital, is such a unique idea and something that we think will be very valuable in the future. Here's my latest conversation with Jeff Park. All right, Jeff, I thought a great place to start is you wrote this piece and you basically pit two different worldviews against each other. The first is the intelligent investor, Ben Graham, and kind of the Warren Buffett world of the view. And then you describe something called an ideological investor. And after I read this, it's like you see it and you can't unsee it. I keep seeing it everywhere in the world. People are all talking about, some form of this idea, but I think intelligent investor versus ideological investor, what is that? Help people understand.
Yeah, sure. So at the core, I think it's redefining what intelligence means, right? Because I think we're told intelligence means a particularly narrow version of how we're taught to invest. But the truth is, intelligence in itself is a meta, it's a concept. And so the version of intelligent investing that we're told through academia and Benjamin Graham and Warren Buffett are not false. But I think it's also worth noting they're for a specific paradigm of the world order in which it worked. And if you believe that there might be a seismic shift underneath of that global world order, then maybe it's time to reconsider a different version of that intelligence. And so, when I broadly talk about the antiquated intelligent investor, Benjamin Graham's intelligent investor, what I'm alluding to here is that it's based on these very fundamental valuation principles that are rooted in what feels Newtonian at some level, right? It's based on time value. A lot of it is about discount cash flows and interest rates and duration curves and how do you model normal distribution across terms, where the very assumption of a normal distribution is the foundation of a lot of options pricing in itself. So what does that mean? It implies that there is a modelable world, right? It actually implies there's like a steady base for which you can do yield extrapolation and liquidity manipulation and transformation and all these great things, which ushered in a great amount of financial prosperity. But it worked because actually, if you take a step back, the Washington Consensus, everything we know about investing from 1980s and on is really is belying this very stable unipolarity of the dollar hegemony, where the risk-free rate itself is like the foundation that is not challenged. But when you really think about what risk-free rate means, that's an open-ended question in itself. And the risk-free rate of like the dollar-based world, if you think that might be changing, then everything you ever knew about intelligent investing has to go out the door and you have to rewire your brain. And the case that I make is that is the backdrop of the macro that we're entering. We are at the point where the Washington Consensus is clearly failing. It is absolutely clear at this point because even last week, Trump made the announcement that we're taking Intel into the US government, 10% stake, and the stock rallied. And nobody batted an eye, as I followed at least in the media, as if this was like one of not the most bizarre things to ever happen in American history. So it shows you society is ready. Here in this country, we're ready to have these kinds of conversations without like squeamishness. And that in itself tells you like the Washington Consensus has failed. And so the opposite of that is the Beijing Consensus, which is led by not a markets first principle, which is an American value. It's led by a sovereignty first principle. And sovereignty first principle by nature is ideological. So the paper that I try to delineate through is we look at ideologies at different lenses. One is a geopolitical lens. The other is the role of technology, specifically as it relates to how AI is an ideology in itself, believe it or not. And then the third is the cultural ideology that is emerging intra-nation as well as international relations that play a role in defining what investing paradigms could look like in the future. So taking it all in, I think the key point here is that intelligence in itself doesn't have to just come from yield-based time models. It can come from other aspects of reimagining the distribution of outcomes that is, I think, a time for us to be ready for into the future.
Now, one of the things that you mentioned in the piece is that historically, event-driven changes to valuations and investor returns were changes to the fundamentals. There are more revenue, maybe an earnings beat. There could be some sort of thing that happened within the company itself, a new product launch or whatever. Now, there seems to be quite a bit of volatility, uncertainty, appreciation, et cetera, that is related to external events that occur. And those external events don't tie all the time to those valuation components. Explain a little bit more as to, we know where we came from. Most people, if you went to an economics class, if you've been on the internet, someone at some point has yelled at you and told you you're an idiot if you don't believe XYZ, valuation metric. But the world we're going into, I think that there is maybe a bifurcation. And I used to think it was purely based on age. Like young people have an understanding of the internet, older people don't. I've met a lot of people who are not, sub 40 years old, but they understand what's going on too. They're online. They get this. And so how do you think about this new world? Like what are the things that are driving the changes in valuations or maybe the data points and the waypoints that are, helping investors understand like where's the world going? Where will returns be captured versus those old school kind of quote unquote valuation metrics?
Yeah, I feel very lucky in some sense that I had the privilege to live in both East and the West as worldviews can converge. And the US and the Western kind of vision is pretty clear about a free markets approach where, to your point, there's not a lot of friction towards the growth model if you believe that everything can be done openly. But actually, it's just not true for the rest of the world. If you look at kind of stocks in Asia, the big news are generally policy related because the very thing that can change the outcome of those private companies to access offshore markets are actually entirely political. And so I think if you only believe in like a revenue model where growth is coming from like subscription and you have free access to subscription, how do I get more eyeballs and that kind of stuff? It feels pretty like quantifiable and mathy and actually like a little bit gameable, but there are such things as blunt events that otherwise is actually even more important. And I just think we took it for granted that for a long time, the market was pretty open and there was no barrier to trade. There were no tariffs and everything was generally kind of absorbed in like consumer first principles. But, anywhere else you go, governments have a lot of decree on being a kingmaker to different kinds of companies in this space. I think you're seeing a little bit of that now here in the US as well, where you see a lot of the corporate leaders trying to get closer to the power of DC. And on the other side, you're seeing kind of the international competitors come to the US for those same reasons. I think, for example, no matter how much you believe that luxury watch markets are going to grow, and it probably will, the way that it's growing with Bitcoin and gold and other hard assets people like to collect and store wealth in, the moment you put a big tariff in the luxury watch market, the valuation changes overnight, right? And so this debate with Switzerland, as it's happening with that particular conversation, every watchmaker is on the edge of their seat because it changes everything. So it doesn't really matter your Excel spreadsheets are amazing or like you have the best trading algorithms to catch like the EPS change faster than somebody else. Those things just become less important. And I think in a way, it's at a philosophical level, this is very powerful for those on the outside, right? Those that are kind of living on the fringes of retail, for example, because they don't have the edge of algorithmic trading. They don't have the edge to getting faster data than other people. So in a sense, by changing the distribution of these outcomes where events appear to be a little bit more random and discrete and creates jump risks, it actually fattens the tails. And fattening these tails is actually pretty empowering for folks in the retail investing space. And I think that's why you always see a lot of community coalition building around investors wanting to support their retail-driven community stocks as well.
Now, one of the aspects that I think has also changed is the retail community used to be seen as not a lot of money, not that smart, definitely not well coordinated, and frankly, not worth paying attention to. It feels like 180 degrees now. They definitely have money. We know that they are a significant portion of trading volume and owning of the assets. They definitely are smart. You just go on any of these platforms, whether it's a YouTube, an X, a Reddit, whatever, a Substack, and they write very long, thorough, well-regarded pieces about companies and things like that. They now can coordinate. I mean, there's, kind of the general purpose communication channels like an X. There's also things like maybe a stock twits where they're on there communicating about a specific asset, in a community. And I think that now the companies realize, what is the difference between your institution and your retail base? Like, there's trade-offs now. The institution obviously has more money. Okay, that's great. They have the ability to give you the institutional kind of, maybe luxury position because Fidelity, is owning of your company. But the retail audience is way more valuable for a lot of other reasons, including their ability to become your marketing team and go and spread the word and kind of, provide feedback and do all these components. So I guess the question then becomes, in a world where you have these external kind of shocks, and when you were talking, it's like somebody's trying to build a house. They have a spreadsheet. Okay, here's how much it's going to cost. Here's the timeline. If I hit all of my assumptions, I'm going to be able to build this house. And halfway through the project, a hurricane comes and knocks down the house.
Right.
And you're kind of like, okay, well, spreadsheet didn't really matter because we never modeled in the hurricane. How do companies or even assets, right? I think of even something like Bitcoin that doesn't have a CEO or a board. How do they navigate this world, right? Like what are the things that they should be doing that's different? And I use that as a way for an investor to see the assets I hold, are they adapting to this new world, right? Like this is now something I need to underwrite, because if they're simply just doing the things that worked 20 years ago, maybe that's a risk. Maybe that's actually something that I should ding them on in terms of my position sizing or how long I expect to hold this asset. So how do you think about identifying like who is prepared for the new world versus people who are completely oblivious to it?
There's a great case that Alex Karp makes in his book, The Technological Republic, about how Silicon Valley in the last 20, 30 years has changed ideology in this country. The part that really stuck out to me, and I think I intuited always in the back of my mind, but it was put so cogently by Alex that it has stuck with me, which is the entire business of search, right? Of course, led by Google, but then by social media and Facebook and even Amazon. All the big Mac 7 essentially are in the search business of some kind for customer eyeballs. If you optimize for wanting to cast the widest net for eyeballs, the incentive alignment here is to be basically a blank canvas, right? It means you actually cannot have a single view for the possibility you might offend one tribe. So the insidious thing about the culture of search, if you build a business on this foundation, and it's been very successful as we know it, is you're supporting a business model in which you must not have views. Because having views itself is the problem for which you're going to create issues amongst the eyeball search business. There's a generation of entrepreneurs basically that grew up in this world, right? All they think about is consumer-facing businesses of growing revenue, where you're trying to be as least offensive as possible, and therefore you must not have any strongly held belief. And that can actually be, on one hand, pretty powerful, but on the other hand, it could actually just totally tear apart the fabric of society and the ability to have meaningful conversations. And so what we're seeing with retail investors, I think, at some level is a pushback, right? They're kind of pushing back on this idea that like, we're all kind of commodities and eyeballs and we're all the same and we're going to be treated as if we're universally fungible. And it's a little bit of a reaction to believing in something. I really do think when crypto Twitter jokes about the saying of believe in something, it is so fundamentally core at the culture of where ideology is going. And as a result, it's becoming more important that the CEOs and the executives that are behind these public companies are able to delineate an authentic vision where it's no longer be enough to actually just be like a people pleaser. And I think that's actually the story of what happened with Kerry Wheeler at Open Door versus the story of Alex Karp at Palantir. I wrote about it a little bit in my writing, but when you're such a blank face like Kerry Wheeler, right, where you don't really have the ability to display conviction in anything, retail is going to call it out. They're like, this person does not understand anything because this person has no view. And this becomes like a pretty meaningful detractor to their ability to then perform on their job. And then you look at somebody like Palantir and Alex Karp. I mean, Wall Street's been like befuddled by this business for years. Like they basically haven't had meaningful cash flow. Everything feels extremely elusive from a valuation perspective. And yet here's this incredibly compelling, cogent speaker who has deeply held convicted beliefs that people are rallying around. And the stock is, of course, like hitting limits for which Wall Street cannot understand it. And so I think it just shows you that some of this is a counterculture. I do think it is a little bit of pushing back to like the Google business model, the Facebook business model, where even Zuckerberg, I think, has now come out a little bit openly to embrace some views. You know, who is this person? And everyone is taking more risk. And I think the future is that the yield curve, as we know it, in which it's considered risk-free, is actually not risk-free at all. The way to take risk, you must actually understand the social risk for which you have to take some action in.
Today's episode is brought to you by Core. You can earn yield on your Bitcoin by just holding your Bitcoin. It's simple. Core, the leading Bitcoin scaling solution, will reward you for not selling your Bitcoin. It's not magic. Here's how it works. Core is a protocol secured by elected validators. You can help elect validators and secure the network by simply locking up your Bitcoin on the Bitcoin blockchain. No bridging, no lending, and just holding. When your validator secures Core, it earns rewards fueled by network activity and passes them back to you as yield. With a minimum lockup of just 1 day, when the time lock ends, you get your Bitcoin back untouched. Still your keys, still your coins, now your yield. For even higher rates, stake Core alongside your Bitcoin and multiply your yield. And if you want to see what your Bitcoin is securing, join millions of others in exploring the largest Bitcoin DeFi ecosystem. There are over 100 live apps in the network and the deepest liquidity in all of Bitcoin DeFi. Get off zero and start earning yield on even just 1% of your Bitcoin by going to stake.coredao.org/pomp. Again, that's stake.coredao.org/pomp, or go click the link in the description. I think of this as offense versus defense, right? So like, if you think of a company, and let's take a public market company, there's a lot of people who say, hey, I have views, but I don't want to say them. Mm-hmm. Okay. Then there's people like an Alex Karp who says, I have views and I'm going to say them. That's kind of like one, perspective to evaluate a company. But there's actually kind of another cut through of this, which is there's actually just a lot of leaders who don't have views, right? Like even if you talk to them in private, no one will ever hear what they say. You're sitting at dinner and you're like, what do you think about X? They'll just kind of be like, I don't really pay attention to it, right? Versus there's a lot of folks like an Alex Karp or Zuck, whoever, who have very strong views. And so in a weird world, you need people who not only have the views, but who are willing to say them in public. And I think it's become more in vogue to say them in public. But that doesn't solve for the people who just don't have a view at all, right? And the reason why I call it offense versus defense is the people who don't have the views, they pretty much show up every day in a generalized way. And they're just like, okay, like what's happening in the world and how do I respond? Whereas you almost would laugh if I told you that's what Karp does, right? Is he shows up every day, he just responds to the world. Like, no, this guy has a very specific view. He's driving towards something. He's on offense. Mm-hmm. He's attacking every day. And he's saying, if something gets in my way, I'm going to remove it, get around it, go over it, or whatever. You can look through many of the business leaders. Elon, he's got a view. He's on offense every day. A Dana White on offense every day, right? You just go through and you're like, okay, wait a second here. The people who are actually doing things, the people who are actually driving real material innovations and change, they're on offense. And so, again, if you think about Bitcoin, it's very interesting to me because Bitcoin, again, has no face, has no people, has no team, but it has a view. Mm-hmm. And it actually expresses that view via code in the world. And although people think of it as this passive thing that kind of exists, the view and the philosophy and the ethos are on offense. And I actually think the more I've thought about it, like, that may be a reason why people are attracted to it, is because it kind of implicitly is telling you, this is the worldview that I hold. This is the thing that I think is valuable. This is how I'm going to act in the world. Yep. I am on offense.
Yep.
And it serves as a magnet. And it's kind of like, what is the commercial? I think it's LeBron James maybe is got a Nike commercial and he's like running and he's by himself. And then like one kid joins and then five kids joins. And the next thing you know, he's like got a whole town that's like running behind him or whatever. That's kind of what has happened with Bitcoin and many of these other assets that I think people would point to, right?
Yeah. I think the greatest kind of misgiving and misconception about value investing is that value is defined incorrectly. I mean, the literal definition of value in the dictionary doesn't say cheap stock, right? It actually is something you hold dearly in your heart as a way to portray a belief. That's what a value is. So Benjamin Graham's version of value investing is one version of it, but the definitional aspect of value means it can transcend that to what other people want it to be. And that's why I make this case that Bitcoin is the ultimate value. It's a capital V value because the ideological pillars of being censorship resistant, where it's not at the whims of these geopolitical orders and tariffs and all these things, it's above that. It's also, I think, culturally very unifying, despite the fact that there's these chasms that we're seeing in society where the ideology is pretty pervasive at a global level. And then even on the front of technology, I actually do think many of you and us, like we've been early on what Bitcoin represents on the other side of AI, which is that like if we believe high compute is important, that is a currency. And obviously high compute is important. Like that is not a controversial statement anymore. And Bitcoin doesn't need to take an ideological view on how AI is expressed either, right? It doesn't actually have to take the ethical concerns of AI into the conversation because Bitcoin is not about having an ethical view. But what it does recognize is it's a store of energy for which high compute is considered important. And so all of these three like pillars that are coming together to me represents value. It's a little bit counterintuitive, but I think when you introspect deeply and understand that's what people want to own in their portfolio, that's valuable to them, I don't think there's any asset better than Bitcoin in the world.
It's funny. I used to, whenever someone would say Bitcoin's not backed by anything, I'd say, well, before I address that, what do you think is the most valuable commodity in the world? And they would say gold or oil or, whatever. And I would say, well, those are all valuable, obviously, but I think the most valuable commodity is computing power. And Bitcoin happens to be backed by computing power. Right. And so it may be hard to think through this, but it's actually commodity backed, currency. And you could just see some people were like, okay, you're crazy. Some people were like, you sound stupid. And then every once in a while you would meet someone and they were like, I never really thought about computing power as a commodity, but like, yeah. Now when I tell people that, they're like, oh, of course, like I've seen the electricity, charts, right? I've seen the, the AI data center investment charts. Like this is very valuable.
Yeah. No, it's a bit of like a humbling lesson for me too, because I think a lot of people in social media in the community think of me as like a very quanty person, right? Like they think I'm a mathy guy.
Are you saying this is my quant?
It probably doesn't help that I'm Asian. Let's be honest. And I am good at math, so I will own it. But many people don't actually know that when I first got to Stanford, I chose to be a philosophy major. And the one thing
blasphemous. Why would you ever?
Well, the thing is, I think also people don't know this, but my good colleague and friend Matt Hugin was a philosophy major, and a lot of times when people are just moved by how Matt is so eloquently able to put together disparate concepts in a very cohesive way that makes it relatable. I revisited kind of all my earnest interests in my earlier years about what philosophy in itself represents. And I think it is maybe also like a counter movement to how technical like the world is becoming, where we're just kind of losing touch a little bit with the things that matter. But this is where I think the lines are being redrawn. I remember walking into my classroom. I was 17 years old, and the professor, put like, a grain of rice on the table and was like, "Is this a heap?" And I was like, "No, it's a grain of rice." And he was like, he puts another grain. He's like, "Is this a heap?" And he's like, "No, it's still 2 specks of rice." And basically, the point you're trying to make was, when does it become a heap? Like, how many specks of these rice we have to put together to convert it into a heap? And of course I walked out because I was like, oh my God, this is not why I came here. I didn't come here all the way to like learn about rice becoming a heap. Like I have plenty of rice at home. Like I don't need to be a part of this. But I look at that memory with great kind of enamorment because it shows you that these kinds of conversations about what like value and quality in itself is can actually be even reflected in that exercise of a heap of rice.
Well, a very applicable example in kind of the Bitcoin and crypto world is I've constantly asked people what qualifies as decentralization. If you have one node, everyone agrees that's not decentralized. If you have two, probably not. 3, okay, what about 10? Is that enough? 100?
Right.
1,000? 1,000,000? Like at what point do you cross? There's no kind of definition. And Bitcoiners in particular, they don't like you know it when you see it, right?
No, they do not.
That's a gray area that people exploit, right? They want to know, what is the like mathematical, thing that I can verify. And the short answer is like you can't sometimes, right? And I think whether it's a heap of rice or a single grain of rice, same thing with decentralization. It's like at what point do you get to that? But I do think that there's this, and you can call it an ideological investor, which you do in this piece. You can call it a Bitcoiner worldview, whatever you want to kind of label it. I do believe that there is an entire generation of people who are growing up, and we know that trust institutions are falling. We know that the economic prosperity outlook for these people is much lower than their parents. Hope is declining. All these things that people have pretty well documented. But I do think that there's an entire generation that just says, if I can find people who think like me, I got a shot to get out or, change or grow my portfolio, et cetera. And I do think like Elon, Alex Karp, right? I mean, you just go through there are very specific examples. What it comes back to though for me is those people also have throughout their career, there's been an iterative test. They say a view, they see the response. Bigger, bolder. I'm going to lean more into what I actually believe. I'm not scared of, the pushback. Actually, when I get pushback, it gives me ammunition to, double down. Like Alex Karp today is not, spitting on a computer on his finger or doing an interview is not the Alex Karp when they first went public, right. But it's working.
Yeah. I think this is the incredible mental incongruence about what financial nihilism can look like to outsiders and to those that are on the inside, which is actually, there's a very optimistic version of this too. When you have kind of the global concerns around income inequality that is just so pervasive, right? It's present everywhere. This is not even an American story. This is everywhere in the world. The number one issue is income inequality. The next generation not being able to afford a home. It's everywhere. And so at that point, what is the rational thing for somebody in that seat to be doing? It's actually recognizing that you have to break the system to give yourself a chance at a fat-tailed event to catch a bid. It's actually a very rational thing to do. And so, some folks may scratch their head and say like, oh my gosh, these people are acting crazy. They're just left tail, right tail on the fringes of being IQ 80 and IQ 150. But guess what? Like all ideologies are IQ 80 or 130. That's the point of having an ideology. If you're 100, you're in the meat of the curve. That's not an ideology. That is what it is.
Existence.
It's just, you're just existing. Right. And so I think once you see that, and I think a lot of smart kind of business leaders are able to see it, like that is a form of soft power. And there's actually a great kind of like a primal optimism in that too, which is that it's a case for a survival mechanism that people are navigating. And I think we should be optimistic about this movement. Like it feels a little scary because it feels like, oh yeah, higher volatility, more kurtosis, more unknown events, more fat tails. But it's almost like a natural pushback to a system that's failed the majority of the people. And so to me, we should have a lot of optimism about it. And religion too, right? At some level, like I think there's been lots of studies that have shown religion is going up in the US now for the first time in a long time. There's also studies that show that religion generally tends to prosper when there's economic hardship, and that there's also a pair with people's sense for wanting a greater belonging. And those two trends, I think, are not just exclusive to religion. It really is this concept of belief-based investing, right? Value-based investing founded upon beliefs. And that's why the ideological investor to me is so important, because I do think that's going to shape the next 10 years. It just won't matter what earnings are going to look like for some of these stocks. It just won't. the things that will matter will be determined by the court, the cabinet, the executive leaders, very people driven, and it won't be driven by kind of like modelable inputs as we've known it.
Today's episode is brought to you by Bitcoin IRA. Are you a crypto investor with a retirement account, but don't have any crypto in your retirement account? Listen up, this is for you. Bitcoin IRA is revolutionizing the way Americans save for retirement by helping smart investors diversify their savings with access to over 75 cryptocurrencies. With world-class customer service, military-grade encryption, and a vertically integrated licensed trust company, it's no wonder more than 200,000 Americans trust Bitcoin IRA to secure their financial future. Get started. It is quick and easy. It takes just 3 minutes to open an account. Once you're set up, their team of IRA specialists will reach out to guide you through every step of the process. Whether you're transferring an IRA from a legacy bank, rolling over an old 401k, or starting fresh with a new contribution, the Bitcoin IRA team is here to help you get access to real crypto in your retirement account. And here is the best part. As a Pomp podcast listener, you can earn up to $1,000 in rewards when you add funds to your account before tax day. Search for Bitcoin IRA in the App Store or visit bitcoinira.com/pomp to join 200,000 Americans on their journey to upgrade their retirement. That's bitcoinira.com/pomp to upgrade your retirement today. When I think about what we're working on, one of the things that is a view, right, that I think is very important is there's a lot of companies that go and they buy Bitcoin on their balance sheet. Some of them are raising capital to do that. I know a lot of private companies that are operating businesses that have nothing to do with Bitcoin, and they're sweeping them in, their profits into Bitcoin. There's a company, Blue Cotton in Tennessee, who even is creating like almost the equivalent of like a retirement account for their employees. And it's like a bonus system. And the longer you stay, the more that you get out of the pot. And the pot is being funded by mining in their facility. I mean, it's crazy, right? Yeah. But very innovative and very valuable to the employees. I think one of our views is buying Bitcoin and holding it will work, but also buying Bitcoin and then being able to operate treasury strategies in a pretty unique way should be very valuable as well. Talk a little bit as to kind of like philosophically how you think through this view as we're kind of putting this together.
Yeah, I think I saw recently that about 10% of Bitcoin is actually now held by institutions. These are governments and public companies for the most part. And when you double click on it, what's actually more fascinating is that there's only like 115 entities or so that constitutes the top 7%. So it's actually early in terms of the counts of institutions relative to the ownership of the Bitcoin network. Which signals something. There's still a lot of opportunity for more companies to come online and buy Bitcoin, but what companies will then do with them will be really different going forward. I think we're used to thinking about the Bitcoin treasury company by the way Saylor has defined it as kind of the de facto base case. But I think that's one version of it. And I think there's things to appreciate there about the possibilities of financializing Bitcoin exposure for the institutional investor. And it's been wildly successful. But that's not really the kind of embodiment at the core of like making Bitcoin in itself more productively useful for the actual gains to be had for society, right? And so the thing that keeps me up a little bit at night with a lot of excitement and a lot of ability to think about what synergies could exist out of Bitcoin is not just Bitcoin accumulation. Of course, acquiring Bitcoin per share is the driving metric for which people will be enthused today. But a close cousin of that is operating revenue that can then also acquire Bitcoin more creatively on the balance sheet, right? So if you can just determine Bitcoin as the unit of account for which you want your valuation of the balance sheet to exist, then the goal is to actually generate revenue to increase the balance sheet in itself. And the nice thing about Bitcoin as an ideology is that if it works, you can basically reduce what is one of the highest cost center of any operating business, which is customer acquisition. Most of the businesses spend an inordinate amount of money on marketing, on distribution, and all the ways. I mean, even the case with how Coinbase and Circle, right, is set up in their JV for USDC shows you the power Coinbase has over Circle in the take rate. So distribution is everything. But the nice thing is, if you're a Bitcoin treasury co that can earn the goodwill of your customers being your shareholders who are ideologically aligned for Bitcoin adjacent businesses, you can attack that vector in a very cost efficient way, right? That gives you an unfair advantage. That gives you a chance to acquire different kinds of businesses or build different kinds of businesses where only you can actually exercise that premium as your customers, then therefore being your shareholders. And I think that is really what I think about a lot when the idea of the Berkshire Hathaway of Bitcoin coming to be, which is the synergy that arises out of that network effect of having your shareholders also being your customers to potentially the businesses that they're also invested in.
Well, what it really does is you start to give ownership to the people who are using products.
Right.
And what's always fascinating to me is I've heard people throughout the years say, whenever I buy a pair of Nikes, I also take the equivalent amount of money and I buy Nike stock. It's a very forward-thinking person, right? They're like, if I'm willing to consume, I also want to own. And, I know people who say, hey, I do the same thing with a Starbucks or a Walmart or, the things I use are the things I want to own.
That's right. I do this and I actually never knew that other people do this.
Really?
I thought, no, this is I thought I was the weird one kind of thinking about it this way.
It's not popular, but I have heard other people say it, right? And frankly, it's usually somebody who is not like a finance person.
Yeah.
Right. It's somebody who just says, hey, I want to build some degree of wealth that isn't going to just come from a W-2 income at my job. And so I don't own anything, at my job. And this is the way that I figured out how to do it. And if you think about go all the way on the other end of the risk curve in terms of hardcore degen crypto, and it's buy a token in a DAO and, get to participate in economic value, whatever. Public companies are actually kind of in the middle. And I think what you're talking about is this idea of serving a customer, but also having them be a shareholder.
That's right.
Is this blending of a relationship between an organization and the people who benefit from it.
Yeah.
Because that's pretty interesting.
Because isn't that what crypto ultimately has always been about, right? It's this idea of owning a piece of a network for which you, of course, are the asset owner, but you're also the productive participant where you're contributing the ability to make it more thriving and be a part of that ecosystem in which the circular flywheel of that revenue model is accretive to all, right? I mean, we should be able to apply the same ethos in an operating company. I'll take a little bit of a jog here. Did you ever read this book by Robert Pirsig, Zen and the Art of Motorcycle Maintenance?
Yes, a long time ago. That's like one of those books that gets recommended and you hear 2 or 3 times, I don't know if I'm going to read that. And then finally you read it and you're like, man, I'm going to go tell 10 people about this book.
Really? I feel the same way.
Yeah.
Many people have told me to read it and I finally got around to it. And I was shocked by how relevant it is now, considering it was written in the 1970s. And it's really a book about technology at some level, which is 70s. I mean, that's pre-internet, pre-anything. Pirsig talks a lot about how to define quality. Like what is the definition of quality? Do you know it when you see it? Do you know when you touch it? Because I think on one hand, you would say it's something well-made, but now with IKEA producing well-made things, we all know that's not what quality is. That's why we're gravitating towards imperfect handmade potteries that we would now then consider quality because it's artisanal. And he defines quality as this. He says it's when the exact moment of the subject becomes the object and you recognize that experience is quality. And I think Bitcoin Treasury Codes and the Bitcoin network and all the ways where the customer is also their shareholder is quality. That is so valuable. And we just haven't seen that kind of shareholder kind of mindset because as you've said, most companies don't exist from that fundamental ethos of operation. But we can change that because it's crypto and it's Bitcoin.
I couldn't agree more. Where can we send people to find you on the internet, especially your writing? I'm trying to get Jeff to write more because he's excellent. You wrote this piece and I told you, I said, dude, you should do this as often as possible. Man, where can we send people to subscribe there?
So I'm on Twitter. My handle is DGT10011. And in my profile, I actually do link my Substack. So if you go there and subscribe on my Substack, you'll also get some of my occasional writings.
And if you've made it this far in the episode, what I need you to do is go and tweet at Jeff and tell him, Jeff, I want to see more writing. And then maybe we can all convince him to write more.
Maybe then I'll have to go back to Stanford and see my philosophy professor and bring a bag of rice and thank him.
The next Substack is just a grain of rice picture.
That's the next meme. Just rice.
Exactly. All right. Well, thank you so much for doing this. We'll do it again next week.
Let's do it.